Vocabulary highlighted in the book Investing for Beginners, Jokers and Everybody in Between by H.G. Ravi. 1. You go all in. 2. Cue the uncontrollable weeping. 3. The market is going to peak right now. 4. Let you swoop in and buy the dip like the genius you are. 5. Now you're in a pickle. 6. Do you hold and hope? 7. The market zigs when you were absolutely sure it was going to zag. 8. The stock market tends to go up over time. 9. Instead, focus on staying in the market, buying solid companies, and letting time, not timing, work in your favor. 10. The stock, which was practically printing money for you yesterday, starts to dip. 11. It'll bounce back. 12. You lock in your losses. 13. You bought high, and you sold low. Bravo. 14. You're left clutching your phone like it's a personal betrayal. 15. You bought high, you sold low, and the market got the last laugh. 16. Magic financial juju? 17. The key to successful investing isn't chasing gains, it's patience, research, and the ability to not freak out when things go sideways. 18. Instead, do your research, be patient, and avoid chasing trends. 19. The stock is tanking. 20. Stock going belly up. 21. It doesn't bounce back. In fact, it sinks even lower. 22. Should you just stick to index funds and call it a day? 23. Skip the horoscopes, ditch the gut feelings, and maybe, just maybe, start paying attention to those earnings reports after all. Trust me, your bank account will thank you. 24. Just ride the wave of collective hysteria. 25. Diamond hands, which, for the uninitiated, means holding onto your stock for dear life, no matter how bad it gets. 26. The stock starts plummeting faster than your enthusiasm on a Monday morning. 27. You know that meme stock investing is like playing the lottery, except instead of winning money, you win a bunch of life lessons and a dash of humility. 28. At least make sure you're only gambling with money you're willing to lose, because when the rocket crashes, it crashes hard. 29. Watch their portfolio take a nosedive. 30. Welcome to the stock market diet, where gains are temporary, but the emotional weight loss will last a lifetime. 31. It's just a little dip. Markets fluctuate. 32. The market experts are saying what they always say in times like these, it's just a correction. A correction? It feels more like a total financial enema. 33. And let's be real, the stock market doesn't follow logic. It follows a mystical combination of investor sentiment, global events, and whatever Warren Buffett had for breakfast. 34. Your portfolio slimmed down from financially secure to I might have to cancel Netflix. 35. If you survived a market dip, you've earned your stripes. 36. Long-term growth doesn't come in a straight line, and dips, even the painful ones, are part of the journey. 37. You start strutting around like Leonardo DiCaprio in The Wolf of Wall Street. 38. Dividend yield. 39. You avoid opening financial news websites because ignorance is bliss. 40. The stock market is an emotional roller coaster. 41. Stick to your strategy, trust in the long term, and remember, the market always rebounds. Eventually. Maybe. Probably. 42. Boneheaded decisions lurk. 43. In your office who's diversified and won't stop talking about index funds. We get it, Carl. You're smart. Go eat your granola bar. 44. But to a bull, every dip in the market is just an opportunity for more gains. 45. Bull mentality tip, stay optimistic, but don't forget that markets have cycles. 46. They're spot on. 47. Buying stocks based on rumors. 48. Selling after a minor market dip because panic sets in, sell, sell, sell. I don't care that I bought this stock. 49. Thinking you can time the market because you had a feeling. 50. Zoo who sneak in, wreak havoc, and then leave. 51. Stop looking so smug. 52. Recognize your mistakes, learn from them, and move on. The stock market is a zoo, and sometimes you're going to trip over a banana peel. 53. The herd follows the crowd, reacting to every little market movement like it's gospel. 54. If you find yourself constantly reacting to the market based on what everyone else is doing, congratulations, you're part of the herd. And no, that's not a compliment. 55. The crowd is usually wrong. Be a bull or a bear, but for the love of all things financial, don't be a lemming. Make decisions based on research, not because Twitter is screaming about the next big thing. 56. You can avoid getting trampled by the animals. 57. Even in a zoo, you don't have to run with the herd. 58. Was just someone burning toast. 59. The market is down 5%. That's literally a regular Tuesday in stock market terms. 60. Completely unfazed by the market's unpredictable swings. 61. Next time the market takes a tumble, take a deep breath, maybe even a long walk, and remember, patience pays. 62. Moral of the story. 63. While the rest of us try not to cringe. 64. Throw us a bone here. 65. Quirks. 66. Now claims he's crushing it with his portfolio. 67. Punch bowl. 68. Steve just smirks and says, yeah, I wouldn't have picked that one. 69. You know what's worse than underperforming in a bull market? The endless stream of unsolicited advice. 70. Newfound financial windfalls. 71. The thing about bull markets is that they can't last forever. 72. Turns out, slow and steady wins the race, at least when the party's over. 73. The real test comes when the market corrects. 74. Your ears perk up. 75. Plummets overnight. 76. And now, the sheep is getting sheared. 77. As you watch your portfolio dwindle. 78. Your own research is like playing financial roulette. It might work for a while, but eventually, it's going to blow up in your face. 79. Experience of FOMO, fear of missing out, and YOLO, you only live once, in stock investing. 80. You miss 100% of the shots you don't take. 81. Things went south. 81. The chump. 82. Stock pick has tanked. 83. Is it too late to buy index funds? 84. Well, YOLOing can be fun, but long-term investing, actual long-term investing, is the adult way to play. 85. But consistency beats chaos when it comes to your bank account. 86. To hold or to fold. 87. Has suddenly gone cold from all the stress. 88. Initial gut punch. 89. The market just keeps fluctuating, sometimes up, mostly down. 90. The office slump. 91. But you're zoned out. 92. That's probably why my tech stock is tanking. 93. How people go broke. They sell in a blind panic and then watch the stock rally the next day while they cry into their leftover takeout. 94. Your job, as a long-term investor, is to ignore the daily noise and keep your cool. 95. Get a little wobbly. 96. The stock market will still be there tomorrow. And the next day. And the next. 97. Pull a rabbit out of a hat. 98. The stock is headed straight for rock bottom. 99. You got caught up in the hype. 100. You scour the internet for articles confirming your bias. 101. It has bailed. 102. The real secret to IPOs? Most of the time, it's better to wait. Let the hype settle, let the price stabilize, and do some actual research before diving in. 103. That's basically a clearance rack find. 104. It's a game of educated guesses, calculated risks, and, sometimes, a little bit of dumb luck. 105. The stock market isn't a sprint, it's a marathon. 106. Don't let Chad tell you what to buy. 107. Don't check your portfolio 500 times a day. 108. Don't let FOMO and YOLO be your investing strategy. 109. Buy when nobody is watching, and sell whenever everybody is talking about it. Trust me, it works. 110. Think of it as not putting all your eggs in one basket, but having them in multiple baskets instead. 111. Stampede. 112. An IOU from a government or company that promises to pay you back. 113. Bottom fishing. 114. Defensive stock. 115. It's the company's performance before all the complicated stuff messes up the numbers. 116. When investors ditch risky assets for safer ones. 117. When a company is profitable. It's the opposite of being in the red. 118. You've maxed out your credit card. 119. A stock that skyrockets because it's trending on social media, not because it has a solid business plan. Welcome to the casino. 120. Selling a stock at the first sign of trouble, usually followed by watching it skyrocket right after you sell. 121. Valuation ratio of a company's current share price compared to its earnings per share. It's like checking if your stock is overpriced or just fancy. 122. Pump and dump. 123. Smushes. 124. Offering first dibs. 125. When things go south. 126. Going big or going broke. 127. A way to automatically sell a stock if it starts to tank. 128. Buying stocks that are cheaper than their true value. 129. A slow, steady decrease in a stock's price. 130. The income return on an investment. 131. The mentality that leads people to invest in meme stocks, convinced they're the next Warren Buffett, until reality hits.